Okay, fantastic. Through the power of social media, we are live once again. Patrick Whaley here, your friend in the mortgage business and host of the Wicked Awesome Report. Joined by my co-host, Declan O'Toole from Select Real Estate. Good morning, Declan.
Morning, Patrick. How's everything with you this morning?
Things are well. So the Wicked Awesome Report broadcasting every Tuesday and Thursday at 10 a.m. or 10-ish, depending on our technical difficulties. And we may have some summer hours coming up with a couple of days off. I think that's well deserved. And on this edition of the Wicked Awesome Report, we have a very special guest, Mr. Michael Barrett. Good morning, Michael.
Morning, Patrick. And Declan, thanks for having me.
Well, it's great to have you on. Very interesting topic that I'm sure a lot of people will be interested in finding out some more details about. Mailbox income. That certainly sounds like fun. Just walk out to your mailbox, open it up, and there's a check waiting for you. But I'm sure there's more to the backstory than just opening up your mailbox and receiving a check. I suppose you do have to put some work in beforehand, right?
Correct. Mailbox income is just a quirky personal brand that I use to get people to remember me and remember what we do. We are a sort of a medium-sized regional private multifamily developer, and we kind of our unique and different thing that we do is one of the main things is we pay and we report to our investors monthly. So we call that mailbox income. Mailbox income is a term that I borrowed from one of our larger investors, who's a retired, very successful Wall Street guy who actually is a partner also in a multifamily investment company out of Dallas. And used that term with me 8 years ago, and I kind of borrowed it.
Yeah, it just stuck. Well, it's catchy.
Yeah,
it's catchy. So, so Michael, tell us a little bit more about exactly what it is that you do. So, obviously, it's with real estate. So you have investors, and I think the correct term is accredited investors. So a person has to meet certain financial qualifications in order to invest their funds with you. And you use that in real estate investments. So flesh that out a little bit. What does that look like? So sort of the, explain it to a high schooler, sort of what are the simple terms as to how that all comes together?
Sure. Well, we're a private investment company. We're still regulated by FINRA and the SEC. So when you take on investors, they need to be, when you're it's called a Reg D percent offering, it's a private offering. You just need to make sure that the investors are accredited. The definition of accredited is a net worth of $1 million, net worth investable, net of your primary residence, and that you make over $200,000 a year, $250,000 married. So, we do approximately 2 new apartment complex projects. That's what we do. We do strictly rental, 100% market rate apartments. We do approximately 2 new projects a year, and we each one of our projects is a standalone LLC, standalone limited partnership, and an LLC. So we raise equity. Say the project is a $60 million project. We raise approximately $25 million in cash and equity, and about $35 million in a bank loan and debt.
Okay.
And we do that with private investors that we have a pool of private investors that we go out to, and they choose whether to allocate, how much to allocate, and we put together that $25 million.
Yeah.
And we have ultra high net worth families that like to do $1 million to $3 million per year per project. We have we have folks that are just retired and looking for passive income and like to do $50,000 or $100,000.
Sure.
solar projects.
So
So
with
it's all
each
across the board.
building being its or each project being its own separate LLC, so the investor gets to choose which building that they're allocating their funds to, which LLC,
Which, well, which project?
which project. Yep.
So an LLC, a partnership might be, it's an apartment complex. So picture a garden apartment complex
Mhm.
off the highway in Merrimack, New Hampshire. We're building one right now, just finishing it, called Residences at Executive Park Drive, at exit 11 at Merrimack. It's 5 buildings and a clubhouse. It's 280 units.
Mhm.
It's a $60 million deal,
Mhm.
just like I outlined.
Yeah.
And we strictly apartments. We got certificates of occupancy. We finished the first 2 buildings plus the clubhouse, and while we're renting those up, we're finishing the construction on the last two. So
Okay.
you when you allocate and you go in on that as an investor with us, you become a member of that LLC
Mhm.
as a limited partner. So your your liability is capped at the amount of your investment,
Sure.
as opposed to if the three of us went in and bought a 4 family together in Charlestown as an investment and created an LLC, we would be we would have insurance and we wouldn't be limited partners.
Sure.
We'd have liability. So
Yep.
as a limited partner, you invest, and as the sponsor, um, we have a template, the same template that we've used for over 30 years. And I can explain that.
Yeah. And so that project in New Hampshire, is that sort of the typical? It's a brand new construction from ground up, and it's all residential use, not commercial space. That's a typical type of project for you.
Yes.
Right. Right.
Yeah, we stay away 100% market rate,
Yep.
all strictly residential.
Mhm.
We like New Hampshire because New Hampshire doesn't have an affordable component like Massachusetts. Um, but occasionally in towns and cities of Mass, they'll reach their affordable quota, and a 100% market rate project will
Okay.
slip through, and we'll end up buying. We buy fully permitted sites from other developers.
Oh,
So
okay.
we're just finishing one in Lowell now, 240 units, right
Mhm.
next to the former Wang Towers that have been renamed Cross Point Towers. We're just opening that this week for rent.
Mhm.
We've been working on that for the construction for a couple of years, and that's 100% market rate in Mass. That's
Great.
one of the advancements.
Great.
But good.
I think you've kind of read some of your insights, but I think you described yourself as a downstream developer. Just kind of touched on that as well. How do you go out and find the projects? Obviously, you're buying fully permitted properties. Are you finding developers that have kind of gone a certain distance and gotten in trouble, or is it, what type of, without putting words in your mouth, how do you go about finding those projects for your investment?
All of the above. We have so downstream meaning a way of saying that we buy only permitted sites. We completely sidestep, stay away from the permitting process. It could take 5 to 10 years to permit. Very long, arduous process to obtain the permits. So what we do is we find, we've been doing this for over 30 years. So we have attorneys, we have developers, we have brokers, there's people throughout the region that know what we're looking for and bring us opportunities as they come up. Um, it can be a developer who has a business model, permits land and then sells it, doesn't build them themselves. There are companies that do that.
Mhm.
Um, there are developers that get to the end and they go, oh wow, holy cow, this is a $70 million deal. I've got to put in 30 million of cash and borrow 40 million and put together the whole thing, and they come to us and we end up buying the site. Maybe they take a position in the limited as a limited partner
Mhm.
at that point to buy them out, so to speak.
It must give your clients, your investors, a certain sense of their money just has to work for them, right? You're not, there's a lot of unknowns when you're trying to get things permitted too. It doesn't really get permitted. So that you're very specific in terms of what you're after. And when somebody puts some money into a project, they know that that project's already going to work. It's a working project.
Right. We look at over 150 projects a year. We're looking at three or four new projects a week. We're bidding on things constantly, and so we have a pipeline of things we've been looking at for a long time. Most of the sites that we build are sites that we've been working on for up to 5, sometimes 10 years.
Wow.
Talking to people,
Yeah.
and eventually, the conditions become conducive to them agreeing to
And Michael,
sell at our price. We're pretty disciplined.
so if you're working through that many projects continuously, evaluating them, what would disqualify a project? What would
if it had an affordable component?
Yep.
If it was mixed use, if it had office space with it, or restaurant space,
Yep.
anything of that nature. So strictly apartments, needs to be deeded separately.
Mhm.
It needs to be very, very distinct and separate and market rate, so that we can build it and or buy it. We do occasionally buy an existing complex that we feel is undermanaged, and improve it, run it for a couple of years and then sell it. But it has to be it has to fit that it's just
Mhm.
it's got to be 100% market rate. It's got to be multifamily, over 100 units, preferably over 150 units. So,
Okay. And you mentioned there that you may sell the project, you may sell the building. How long typically, is there a particular holding time that you have? Is it a 5-year, 10-year? Or is it different project by project?
If you average our last 14 sales, our average hold is 4.7 years.
Okay.
So call it 5 years is our average, and that's from when we stick the shovel in the ground and start digging to
Mhm.
build. So
Okay.
usually takes 2 years to build, another year to stabilize, and we'll refinance, deliver that monthly mailbox income, return some equity, and then sometimes we're a seller right when we fill it up after year 3.5, right around year 4. Sometimes we still smell the paint drying. If we're in the right market conditions, we might sell. But the investors are all aging with us, 61 years old, and the investors are getting less active with their uh, jobs and their lifestyle. They're looking for that passive income. So they're asking us, once things are up and running and things are cash flowing and we're sending out monthly checks, the investors are really asking us to hold the properties
Sure.
a little bit longer, not to be so hasty and sell.
Yeah. Sure. Now,
even at a great profit,
Yeah.
we're a for-profit. So.
Of course. Now, so that mailbox income, may be different project by project, but what's a typical, rate of return that an investor would be seeing?
We have a rolling average of about 14.1% over those same last 13 or 14 sales. The average current preferred return, current pay, is in the 9 to 10% range, and there's typically between 25 and 50% of profit at the end. So we're adding another, we're adding another 4 or 5 or 6% to the return when we sell.
Great. Fantastic. And so you mentioned that you're focusing a lot in New Hampshire and in Massachusetts, if you can find a project that has at market rent. Any other market areas? Any place else in the country where you're doing this?
Just an hour and 15-minute drive time from Boston.
Right.
So we like southern New Hampshire because there's no portable component.
Yep.
It's very stable, steady, 2.5 to 3% rent growth market. there's a there's a shortage of supply due to the fact that it's a growing environment. It's a tax-free state, no
Mhm.
income tax, no sales tax. Um, a lot of companies have chosen to move up there and open back offices like Blue Cross, Blue Shield, Cigna,
Mhm.
Fidelity. UNH has really grown
Sure.
across the region in Manchester area, that whole corridor
Yep.
from Merrimack Valley up to Manchester Concord area.
Of course, yeah. I mean, so if you're
Steady.
following the job growth, of course, it's going to make sense that you're going to need there's going to be need for housing.
But we're out as far as Worcester, and then we go down the 495 down into we have a property in Mansfield, Mass.
Mhm.
Um, and we have three properties in northern Indiana, one in Providence and one in two others in northern
All right.
Indiana. So
So
we're about an hour and 15 minutes radius though.
yeah. So
That's under the sandbox.
I'll nominate you as the local expert then in this market area.
Not sure about that.
So, Michael, you've got the direct, essentially direct investment limited partnership, I think is how they describe what you do, right? What's the difference between that and a REIT, and what's the difference in terms, if you can kind of speak to that?
A REIT is it's a legal entity that is, is a fund, and and by law it's required to distribute 95% of its cash flow on an annual basis. So um, and so there's a lot more fees in a REIT than there is in a direct investment. There's some drag because you know not necessarily all the money is deployed all the time, and there's also um, there's also liquidity, just like with ours is an considered an illiquid investment. REITs, the advantage is with a REIT, when you buy a publicly traded REIT, you can get in and out. You can sell the stock, but you're also vulnerable to the stock taking a hit and
Mhm.
losing value. So, but we have liquidity, and then there's non-traded REITs. But generally, REITs, um, some of them do really well, and I'm not an expert in REITs, but in private partnerships, you you have the advantage of being of direct ownership. 95% of the depreciation and the losses that are generated during construction flow through, just like you are a direct owner. You have limited
Mhm.
exposure, but you get all the tax benefits. So you're you're investing in a specific deal. So you can look at it, see it, watch it grow, and watch it perform, and then uh, resell, sell it, run it for a while, sell it opportunistically. But it's different than a REIT because you can just invest deal by deal. You're not investing in a fund that's putting you in. It could be 10 deals. It could be 100 deals in a REIT.
Um, Question again, I don't know if this is going down the right line or not, but 1031, if somebody has funds, because first off, it's tax, if you've got a tax shelter there for what you do, it has one tier that does in real estate. Is there any possibility for somebody with got a 1031 exchange? I know they're committed to limited partners, so to speak, but is there an opening there, or is that something we can go through?
We get calls every week for people looking to do 1031s, and we don't qualify because when you invest in a limited partnership, you're buying a fractional ownership of the LLC of the partnership itself. You're not a direct owner. So in order to qualify for 1031, you need to be a direct owner
Yeah.
and be actively involved in the management of the profits. We do not qualify. So we get a lot of people asking.
I figured as much in my mind as well, obviously.
Wish,
Um,
wish we could.
So it's a steady income. I think something that's I've seen you compare it to Reese's peanut butter cups. That's something like you're an investor. I'm quoting it again. Some of your insights are interesting online. It says same as last year, no changes, nothing new. Perfect. Would that be how you describe your company if you're an investor?
Well, I kind of saw that as a Reese's ad campaign. In fact, they do the same thing. Nothing's different. Perfect. So, what makes us compelling is that I think, is that we do the same boring thing over and over again. It's very formulaic, um, very same, and the investors really seem to like the fact that we don't wander off in different areas. We do the same thing. We kind of continually refine that and pretty good at it. So the Reese's campaign and same thing, perfect is kind of resonated with me when I saw it. So,
Yeah, sure. If it's not broken, don't try and fix it.
right.
How do you, I suppose, kind of with that same thing, do they get to see how a project, so if I'm an investor, right, so here's my money, I have 100 grand, that's the number it is, right? You've got a fairly good idea of what I'm going to get for a return. Do they see how the project, how do you report about, how often do you report to your clients in terms of what the progress is and when you're
We report monthly. So as the project evolves, you get a monthly. All the constituency, the investors get a monthly report. When the project's under construction, you have a summary, some pictures, and an executive, a summary of what went on that month, and then it has the budget, the total budget, what's been drawn down, every line item for that month, and then under that there's a requisition for what was drawn down. So if it's a $50 million project, you might get in a given month, you might be drawing down $3 million, something like that for construction. It shows exactly what was done, and and the report's very detailed. It has pictures, and we're also one of the things we're doing now is our construction manager Bob Simons has become a drone uh, expert, and he's updating drone videos at least once a month, if not every 2 weeks, on all of our construction projects. So if you go on our website, you can go to the portfolio page. There's drone videos for every property, so you can get a flyover and really, without getting in your car and going out and looking at it yourself, which you're welcome to do. You can see it while you're sitting on your couch.
Well, talk about a bird's eye view. That's a great way to take a look at the project under construction. See how your money is being put to
Drone
use.
videos.
Yeah,
Drone videos. They're great. The quality is amazing.
fantastic.
how do you see the demographic shift today? Have you seen much? Have you had any impact from COVID recently? I know you're still a developer, right? So have you, of course, these guys are from New Hampshire versus Massachusetts, so have you been slowed down at all? And of course, two-part question. One is how have you been impacted yourself, but do you also, where do you see, or do you have any sort of opinion on where you see the demographics going post-COVID?
Yeah. Well, the demographics have been shifting for the last 20 years. Households are starting 7 years later than they did when 30 years ago when I bought my first house. I was in my mid 20s. People are on average buying homes 7 years later, so they're becoming renters and they're staying as renters longer. More people are choosing to rent over home ownership with taxes, the cost of home ownership going up, and that's going to get worse after COVID because these municipalities have taken on so much debt. They're actually announcing already that they're going to be significantly raising the property taxes. So the cost of home ownership will continue to go up. More people are choosing to move out of the city to the suburbs and are choosing a rental lifestyle uh, over home ownership, and they want to be mobile. There's no, when I grew up, you worked for one company your whole career, you bought a home, you paid off your home, and you retired with a home that had no debt and got a pension. But in this day and age, it's different. They're not, people are considering homes to be good investments. They're, when you're raising kids, and you might find it to be a necessity during that time, but people are looking more for mobility and to write just one check every month and to invest their uh, excess money into stocks, bonds, private real estate offerings, that sort of thing.
Or direct investors limited partnership.
So the demographic shift is taking place, and then post COVID, more and more people are choosing to move further out, and Southern New Hampshire's just been a great growth market because of its the lifestyle, the tax-free status, and the cheaper rent. The employers like Fidelity are they have a huge call center in Merrimack where they are probably, I don't know what they're paying for rent, but it's probably $20 a foot, low 20 bucks, as opposed to paying mid 60s a square foot downtown Boston for a call center. So there's a lot of lifestyle and economic
Same thing's going to happen with, again, I'm just thinking of my opinion, but the offices, I think some offices start going 2 feet and each commute becomes less of a burden. You'll have people in Southern New Hampshire maybe that they'll find a place that they want to stay in for the right price, and then we talk about the taxes. Maybe they'll start commuting with the city.
Yep. Or Merrimack Valley. I mean, we love Merrimack Valley. Lowell, the project in Lowell. We have 2 projects in Lawrence, two mill rehab projects in Lawrence. The next 2 we're building are one in Nashua and one in Goffstown, just outside of Manchester. And so, we'll just continue to look at projects on a deal by deal basis and evaluate where we think things are in the market's going, and build our thesis around what is, each individual deal.
Yeah,
Fun,
yeah. Declan and I have done a couple of shows on sort of the whole COVID effect and people moving out of the urban areas out to suburban, even the next ring out, the ex-urban areas. And I think that's that's a trend that is going to continue. I don't think that's a short-term sort of knee-jerk reaction. I think that's more of a long-term play that's just going to continue to happen.
And people aren't moving, so we usually have way more turnover. So our occupancy is through the roof. We're almost 100% occupied on all properties because there are people looking to rent, but the people that live there would typically move around and make decisions to try something different, move around, and increase rents, and that could be a reason someone chooses to leave.
We are talking about last thing I heard you report on anyway, so
Yeah.
So, Michael, the question is, are you still, so you've got this business running this partnership. Are you still looking for investors? And if so, what's your typical investor response? You on that? But are you still out there looking? Will you take on more? Do you need more open to investors?
Yeah, sure. We're always looking for new investors. Our model is we don't have any institutional money in our partnerships. It's all private individuals, some of which are, work with family offices and investment advisors, but individuals, and we're like any other business. We want a diverse base of people. We don't want any one source of money to be too big. We like to continually bring in new people because some of our older investors just get old and decide to move on. They invest in a number of deals over a number of years and they just age out or they allocate out. And so we're always looking to talk to new people.
And Michael, what would
people that own real estate themselves that are managing it, it's managing them, maybe a good source of, might be happen investing. It seems like a better source of income for the guy maybe sells his real estate and and of investing in you guys? Do you get former real estate people that get involved?
We have we have a dozen or two families that are professional real estate families. They're developers, and they're just sitting on a lot of cash, and they're out looking for deals, but they just can't find yield in the marketplace. They're just, for instance, I was introduced 2 days ago to by someone you know, Declan, who is a brother-in-law who has a very large development business in Phoenix, Arizona, buying distressed property, renting it, got a huge portfolio of apartments and single-family homes, very sophisticated. He's got a very large investment group, and they're just at a point in that market there where they're not finding a lot of value, and they want to continue to put their money to work. So, they just decided to do a small allocation and just start, they know the business, they know that they like our format, they're going to have our big cash for each deal. Not big, they might be sitting on $5 million in cash, and they might put maybe $200,000 for project into our site, just to keep money at work. We have a lot of those developer type people that are actively out looking for their own deals, and they just want to keep their money at work, and they're not comfortable piling their money back into the stock market.
Sure. So, Michael, if we do have anybody watching this that believes they're an accredited investor and would like to get in touch with you to explore some investment opportunities, what's the best way to reach you?
We have a website, it's SMC. If you Google SMC Management Corp. Boston,
okay,
there's a contact page, and my contact information is right on there. But my email is mbarrett, MBARRETT, at smcmgtco.com.
Okay. All right, great. We'll get all that contact information listed. So mailbox income, interesting concept. I'd certainly like to be walking out to my mailbox and seeing a check every day. So maybe we should talk a little bit further offline, Michael.
At your convenience. It is August.
Fantastic. So we'll wrap up here. Before we do, Declan, any closing thoughts for us?
No, I'm looking at Mike. If you don't mind, read your mission statement. It actually ties into everything we talked about.
Oh, that'll be a great way to close it out for sure. Yeah.
Well, I was going to just say it, but I wasn't going to. It's very well said. So basically, you're saying that developing and investing in multifamily real estate properties, providing investors with steady cash flows and better than market returns, while deferring income taxes by converting ordinary income into long-term capital gains.
Well, I think that says it all right there.
Patrick, thank you for the time, and I'd be sure to be in touch with you with any future personal needs with financing or refinancing.
Fantastic. I'd be happy to hear from you and happy to help out if I can.
Your market area is massively
I'm licensed in Massachusetts only. New Hampshire will be coming soon.
Okay.
All right. So
I'm a Mass resident. So.
All right. Once we get that set up, maybe we got some New Hampshire business we can discuss too.
Right.
All right. So, Michael, thank you very much for joining us. Very gracious with your time here this morning. Do appreciate it. Declan, thank you for joining us again. Another edition of the Wicked Awesome Report, broadcasting every Tuesday and Thursday at 10 a.m. or, again, 10-ish, depending on our technical difficulties getting started. I want to thank everybody for tuning in. Head over to Wicked Awesome Report Facebook page. Give us a thumbs up, a like, a comment over there, and you'll be notified next time we do broadcast live. So until the next edition of the Wicked Awesome Report, hope everybody stays well and stays awesome. And I will end the broadcast. Thanks for tuning in.